In this video we are going to talk about Dividend Aristocrats to buy now. So before starting this video, please like this video and subscribe to this channel for our future updates. In the financial world, dividend stocks are those that make monthly payouts to their shareholders, usually in the form of cash payments. When it comes to income, dividend stocks can be a valuable source of income, but the finest dividend stocks can also serve as excellent vehicles for building wealth over the long run. However, not all dividend stocks are good investments, and many investors aren't aware where to begin their search for high-quality dividend stocks. This in mind, the following are some dividend-paying stocks you might want to explore, as well as some of the most crucial characteristics to look for in high-yielding dividend stocks. The Dividend Aristocrats Index is a terrific location to look for high dividend stocks, according to the index's creators. Dividend Aristocrats are firms that are both included in the S&P 500 index and have paid and increased their basic dividend for a minimum of 25 consecutive years, as determined by the Dividend Committee. Leggett and Platt, Incorporated, NYSE, Leg. Leggett and Platt, Incorporated, NYSE, Leg, is a home furnishings company that manufactures engineered components and products for the home furnishings sector. In addition, the firm works via three segments: bedding products, specialized products, and furniture, flooring, and textile products. The company ranks 8th on our list of cheap dividend aristocrats to buy right now. As of this February, Raymond James maintained an outperform rating on shares of Leggett and Platt, Incorporated, NYSE, Leg, and set a price objective of $48 for the company. Leggett and Platt, Incorporated, NYSE, Leg, reported earnings per share of 66 cents in the second quarter of 2021, topping analysts' expectations by 12 cents. The company's revenue was $1.27 billion, an increase of 50.23% year-on-year and a $41.90 million beat on analysts' expectations. Stock of Leggett and Platt, Incorporated, NYSE, Leg, has up 13.75% in the last 6 months and 13.57% for the year so far this year. The stock of Leggett and Platt, Incorporated, NYSE, Leg, was owned by 14 hedge funds out of the 873 hedge funds tracked by Insider Monkey at the end of the second quarter of 2021, for a total of approximately $106 million. In the preceding quarter, there were 24 hedge funds with a total stake value of nearly $83 million, which is a significant increase. Leggett and Platt, Incorporated, NYSE, Leg, is a fantastic stock to invest in, much like Target Corporation, NYSE, TGT, AbbVie Incorporated, NYSE, ABBV, MasterCard Incorporated, NYSE, MA and Chevron Corporation, NYSE, CVX. Franklin Resources, NYSE, Ben. Franklin Resources Incorporated, NYSE, Ben, is a global investment corporation based in the United States. It is 7th on our list of cheap dividend aristocrats to buy now, and is the next company on the list. Through its subsidiaries, the company develops equity, fixed income, balanced, and multi-asset mutual funds, as well as invests in public equities, fixed income, and alternative markets, among other things. As of this May, Brian Bedell of Deutsche Bank has a hold rating on Franklin Resources Incorporated, NYSE, Ben, with a price target of $33, up from the prior goal of $29, and a hold rating on the stock. Franklin Resources Incorporated, NYSE, Ben, reported earnings per share of 96 cents in the fiscal third quarter of 2021, topping analysts' expectations by 18 cents. The company's revenue totaled $2.17 billion, an increase of 82.89% year-on-year, and a $43.73 million beat on analysts' expectations. Ben is the stock of Franklin Resources Incorporated, NYSE, Ben, which has gained 24.34% in the last 6 months and 33.69% for the year so far. 30 hedge funds out of the 873 hedge funds monitored by Insider Monkey held positions in Franklin Resources Incorporated, NYSE, Ben, at the end of the second quarter of 2021, for a total of around $205 million. This compares to 31 hedge funds in the previous quarter, with a total stake value of roughly $198 million and a total position value of approximately $198 million. A solid stock to buy is Franklin Resources Incorporated, NYSE, BEN, which is similar to other well-known companies such as Target Corporation, NYSE, TGT, Advi Incorporated, NYSE, ABBV, MasterCard Incorporated, NYSE, MA, and Chevron Corporation, NYSE, CVX. Cardinal Health Incorporated, NYSE, CAH. Cardinal Health Incorporated, NYSE, CAH, is a healthcare services and products firm that provides a comprehensive range of services and products. Its headquarters are in Ohio, and it primarily operates in the United States, Europe, Asia, Canada, and globally. In our ranking of cheap dividend aristocrats to buy right now, the business comes in at number 6. At the time of this writing, Deutsche Bank has a hold recommendation on Cardinal Health Incorporated, NYSE, CAH, with a price objective of $51 on the stock. Cardinal Health Incorporated, NYSE, CAH, reported earnings per share of 77 cents in the fiscal fourth quarter of 2021, which fell short of analysts' expectations by 43 cents. The company's revenue totaled $42.59 billion, representing a 16.07% year-over-year increase and a $2.37 billion beat on analysts' expectations. A further increase of 0.49% in the last 6 months and a gain of 1.61% in the last year has been achieved by Cardinal Health Incorporated, NYSE, CAH. 40 hedge funds out of the 873 hedge funds monitored by Insider Monkey had positions in Cardinal Health Incorporated, NYSE, CAH, at the end of the second quarter of 2021, for a total value of around $897 million. This compares to 39 hedge funds in the previous quarter, with a total stake value of roughly $967 million and a total stake value of nearly $1 billion. Lowe's, NYSE, Lowe. Lowe's, NYSE, Lowe, is a home improvement retailer. The stock of the home improvement behemoth may not appear to be particularly intriguing. And that is correct unless you are a fan of dividend growth. The company has increased its dividend for an astonishing 46 consecutive years, and during the past decade alone, the payout has increased by a whopping 471%. The following is another crucial number that is favorable for Lowe's. The typical home in the United States is 37 years old. Lowe's will see a significant increase in sales from the next generation of do-it-yourselfers. Walgreens Boots Alliance, NYSE, WBA. Walgreens Boots Alliance Incorporated. It is currently undergoing a huge transformation at Walgreens, one of the largest retail pharmacy operators in the world. Among its ambitions is to reduce costs while increasing digital sales. Perhaps even more significant is the addition of full-service healthcare clinics in hundreds of its retail sites in the very near future. Being more integrated as a healthcare firm should help this already lucrative company become even more profitable, allowing it to increase its already generous dividend to even greater levels in the process. Walgreens stock has a dividend yield that is well above 3% at the time of this writing, as well as 45 years of yearly payout growth. There is a lot to appreciate about Walgreens stock for dividend investors. Realty income, NYSE smiley face. If you're searching for a straightforward approach to invest in high-quality real estate for both income and growth, this could be the ideal investment for you to consider. The company possesses a diverse portfolio of properties that are largely resistant to e-commerce, and it generates significant cash flow from tenants who sign long-term leases. Realty Income is one of the newest members of the Dividend Aristocrats, having joined the index in January 2020 after achieving 25 consecutive years of dividend increases. Realty Income is one of the most profitable companies in the world, along with 50 straight years of paying investors every month. Johnson & Johnson, NYSE, J&J. Johnson & Johnson, NYSE, J&J, is a multinational pharmaceutical company. A portfolio of strong brands that manufacture products that people require, specifically healthcare items, is owned by Johnson & Johnson. In addition to its well-known brands such as Band-Aid, Neutrogena, Tylenol, Zyrtec, Benadryl, and Johnson's, Among others, Johnson & Johnson has large and consistently profitable operations in pharmaceuticals and medical devices, the combination of which has allowed the company to raise its dividend for 58 consecutive years. This breadth of offerings spanning consumer health brands, pharmaceuticals, and medical devices is unparalleled, and it has proven to be a tremendous profit generator. Target Corporation, NYSE, TGT. Target has constantly demonstrated that it does not need to compete on price in order to succeed in the harsh world of cheap retailing. It has consistently outperformed its competitors in terms of profitability, boasting some of the highest gross and operating margins in the retail industry. At the same time, the company's focus on building its internet business and expanding its in-store services has allowed sales and profitability to continue to increase at a healthy pace. Target should be on the shopping list of dividend investors because the company has been growing its dividend for 49 years and counting. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.